Just one. I put my sort of ass on the line here, making this Ethereum 1K to 20K video. We're at about 2,500 now, so we got a long way to go, okay? You guys can give me a congrats or a victory lap if we see ETH into new all-time highs. Then the real party can stop, okay? Then you're going to see me trolling. Until then, we got a long way to go, man. We got a lot of steps to go to get there. But anyways, back to Ethereum, guys. If ETH does break this resistance on the weekly, I'm going to tell you right now, this gap here between 2,400 and 3,400 is going to close very, very fast. Just as fast as this gap closed, right? From 1,400 to 2,400, watch this gap close faster than you can even say bananas, okay? So you hear me say bananas? Say bananas yourself. That's how fast that gap would close. Weekly RSI gets back above that April 27th high, right? That's going to confirm the weekly bullish divergence. And again, every single time we've seen that for total 3, it was the bottom of the altcoin market, guys. I'm just stating facts. I'm not trying to, come on here and give you my emotional, sort of how I feel emotionally. Because I'm going to be honest, guys. The last couple months were brutal, dude. I was so bored. Right? But the only thing that kept me going, okay, and making bullish content the last few months is focusing on the charts, not focusing on how bored I am and how meaningless crypto seemed when I was seeing AI stocks moon, right? It was just kind of focusing on the charts, focusing on the bullish divergence on the weekly time frame, and looking at what happened for the total crypto market, excluding Bitcoin. Every single time we had a weekly bullish divergence. And I want to show you guys on the chart, okay? Each time we confirmed the weekly bullish divergence and kind of where we were, okay? So we confirmed this one. This one was confirmed like right about here. All right, so I just want to show you guys on the weekly chart for total 3, okay? Once again, this is altcoins. This is excluding Bitcoin, ETH, and stablecoins for you. So for your favorite altcoin, my altcoin, all right? This is for you. This is for you. So every time we saw this, guys, okay? Again, 2016, when we confirmed the weekly bullish divergence, right? Which is when we got back above that high on the RSI right here. This is where total 3 was, okay? And obviously, you guys can see what happened after we confirmed the weekly bullish divergence on total 3, right? Not when we had the bullish divergence, but when we confirmed the bullish divergence, right? 2020, right? After we came out of the COVID crash, we confirmed the weekly bullish divergence right about here on July 20th. This is where we were on the weekly candle of July 20th, right? You really just kind of continued up from there. You did go sideways for a few more months, but ultimately you didn't really go lower, and you kind of just continued up from there, okay? And then obviously we had back over here in 2023, we confirmed the weekly bullish divergence right here in January 2023. Okay, right about this candle here. We continued up. We did drift back down. Okay, but I want to. The important thing I want you to realize is we didn't go too much lower. And I think any pullbacks you do get, if we do get any pullbacks, are opportunities. They're not a thing to be scared of. Okay, it's opportunity. So if we do see the altcoins drift back down here and fill this candle, that's an opportunity like 2022. It played out any perfectly, right? We came back down. We made a higher low, and from that point we saw Bitcoin absolutely moon. And this is what we were talking about in the videos for weeks, man. We were looking for this higher low to come in on Bitcoin. We didn't know where it was going to come in. We didn't really care where it was going to come in. It was a matter of just looking for Bitcoin to make a higher low. We saw Bitcoin make this higher low just in like 2018 and just like in 2022. And in both those time frames, you saw Bitcoin, once it really broke out of that consolidation range, you just saw it take off, right? It did not wait for anybody, did not give anyone entries, right? You saw it over here in 2022. Once you broke out of that consolidation range, it took off. It did not give everyone entries for possibly a few weeks, okay? If we just continue up, great. I'll be happy if we just continue up, man. Honestly, like this week was crazy, man. Really, I've been bored with crypto, bearish with crypto for so long that to flip bullish and to see price movement up like this, man, it's exciting and it makes you remember the good old days. All right, and hopefully we are heading back into those good old days. But I wouldn't mind a little bit of chop suey like this. Let the bearish sentiment build up again before we take another step higher. Okay, so right now for me, for best case scenario for the bears or someone that wants to get into the market, I do think that whether it's higher or whether it's here, we see some type of chop suey that's going to make everyone pissed off again. Trump will call us a massive Bart Simpson. Well, we'll see, man. We'll see. Okay, focus on the charts, not what you feel. Okay, focus on the charts, not what you feel. All right. So Ethereum is right at major resistance level. Okay, so again, if Bitcoin does see a multi-week chop sideways, okay, Ethereum is at a major resistance here. But I want to make this clear. If Ethereum can get a weekly close back above this resistance point here, you pretty much have clear skies until up here towards 3,400 or so. Okay, so I just want to make that clear. ETH is right at resistance, so it would make sense for it to chop sideways. If Bitcoin is going to chop sideways for a little bit, okay, because it is at resistance. But I'll tell you right now, if this does break here, there is pretty much clear skies all the way back up to the January 2026 top. Okay, so my argument for that is when Bitcoin does come out of a low range, there typically is no pain for a little bit. The pain is actually people who miss the bottom, right? So for example, this is FTX. Once you broke out of this range, right? It was really 1, 2, until you really saw a significant dip. It was 21 days when you broke out of that range until you saw a significant dip. Right? The pain was people missing the low. You could argue that this whole thing is the accumulation range, and we actually haven't even broken out of the accumulation range yet, right? You could argue this whole thing is the accumulation range, right? So all of this is the accumulation range, which I would argue that's the case, right? All of this is the accumulation range. So you could argue we haven't even broken out of the accumulation range yet, but
the chart tells a story most people miss. Many crypto projects launch with a giant green candle in the first week. It looks bullish, but often it reflects concentrated early ownership. New investors see market cap and price action, but don't always consider how much supply may still be held by early participants. Eros took a different path. Eros was a free, fair launch airdrop to the Titanx community on Pulsechain. That wasn't about extracting value, but rewarding an existing community and building something that could survive. Through more than 2 years of brutal bear market, Eros has repeatedly gone through capitulation and recovery. Sellers exited, new believers accumulated. The community kept building. Ownership has continued to rotate over time, rather than being defined by a single launch event. As the next bull market approaches, many newcomers won't simply chase the newest token. After years of rugs, scams, and failed projects, many will be looking for communities with a proven history, committed builders, and a project that has already survived the hardest market conditions. Bull markets create hype, bear markets build conviction. Eros has already been through the fire. Eros, burn baby burn.
Yeah, so Flare currently has growing LPs, right? I'm definitely gonna LP with some of the Buildify tokens. But as we speak, once we get some of this stuff out for Buildify, we're gonna launch the staking protocol for Flare plus an LP amount. So for people to add LP and constantly add rewards for Flare. So unfortunately, I love it. So let's see.
Flare's a solid protocol, yeah, and as far as the S88, that's actually a derivative of Scale. I think that's why Crypto Eros is mentioning that. So S88 so Scale is a tax token on Ethereum. S88 is a tax token on Ethereum base, but is not a tax token on BNB Chain or Arbitron.
We love it. So he says we have plans to launch on Eros on ETH that is LP with Hydra timing. So I look forward to that. Yeah, I welcome all builders. We welcome all communities, especially if you love a certain token. What better to build on it? Start your own token, and we've already.
A long question from Eros. Well, let's read it there.
Says if Flare supply and S88 supply move to base, I'm going to LP with S88 and Flare on ETH to build on Eros. So good. Big Flare and S88 supply reduce Omnichain. Yeah, we love it. Yeah, I would love nothing more than that. We already have a pretty good LP, especially on Pulsechain with Eros, and we're hopefully going to keep adding to it. And it's the more and more that's off the market, the less it's possibility of selling, and it's going to be getting really big. And S88 is one of those coins that does have a very low amount of supply on other chains too. So it's light and it can move really fast.
Do not promote and market Eros before you buy the coin. This is the way. The best way to buy Eros? Dollar cost average, baby. Burn bright, buy $50 daily, and score a whale bag.
Sir, I do love you, Mr. Eros.
We should do that. Let's see. Okay. Are you guys still bullish on Titanx and Omnichain to Pulsechain? I am still bullish on Titanx for sure. It's just the timing. You got to get timing right on that. Arguably, he's probably waiting for the ETH price to run. It's still got all that ETH in there, right? So, it's still got its fundamentals, and I know people are accumulating around the bottoms around here, arguably. So, yeah, that's still in play. I know we haven't covered it too much, but, still, watching that from time to time. Omnichain, Pulsechain, yeah, well, there are a few applications that's being bridged in. So that's certainly a play. The dude, of course, is a key player amongst some of that. There's the other guy that does the other big protocol too. Forgotten his name. So there's been quite a bit bridged in the Pulsechain. We think this will be a bonding leverage cycle. So yep. Sort of on the same table there. Thomas as well. I like Taurus on Titanx and Unity on Pulse. Some ideas as Taurus. Yep, that's all from cryptographics. We haven't really seen it run yet. It's still got about 50k on Pulsechain, I think, for the buying and LP support. We'll keep a look out for that. We're going to do collaborative staking. Haven't really seen much on that, but cryptographics is amazing. So we'll keep a look out for that too. But I feel like there are so many devs who made coins on Titanx and do nothing but sell Titanx. Well, there's probably a bit of that too because Jake's not around, is he? He's there. He's around, but not around. He's sitting in the shade. But yeah, let's talk about that. Now there is that issue with the buy and burn. I just can't remember what it was. I might have to go back and refresh myself. But certainly that's a lot of ETH sitting. Was it 4,000 ETH sitting in there? So yeah, they can pump that. So yeah, some people DCAing, I think. Certainly worth a look. We'll try and bring it up again and have a look at the stats. Mike King's still around, doing stuff as well. And I know the dude's just recently launched a new project, which we probably might end up talking about on this channel too. So there's a little bit of Titanx stuff out there. Might make it hard to run. Right, Insight in the house there. Yes, we have a very large Taurus Euros. Yeah, Eros is the one. Yeah, is the one I was thinking of. And also a large Unity Eros liquidity. Yes, Eros is the one, the bridging one over here, bonding. Yeah, I think you just changed your name on your title maybe. But Eros there, you got that on the Unity name. Yeah. So Eros and the dude stuff is both Bridges stuff that could do quite well. Has YouTube side on that? Yeah, go check it out on Eros.
There's no winning in the game. There isn't. It's the price chart. That's all that matters, right? That's really all that matters. Insight to light. Risk of for 9 years. Eth Btc and Russell 2000, the S&P 500 shows it. Yes. So my friend Eros, is that Mr. Eros? Just to let you know, my friend. I thought you were an AI bot. I hope Titanx comes back for you, sir. I hope they all come back. I think everyone deserves it.
Here's the process. If it fits your own strategy, begin with your wallet. Check your MetaMask for ecosystem tokens you hold, for example, Dragonx, Helios, Blaze, Hydra, Scale, Taurus, Unity, JakeX, LegendX, or Eden. Next, connect to the official Pulsechain bridge, select the assets you want to bridge, confirm the transaction, wait for completion, and verify your tokens arrive in your Pulsechain wallet. Then, go to a Pulsechain DEX. You can either swap some tokens for Eros, or add liquidity by choosing a pair like Dragonx and Eros, then depositing equal values to create your LP. After that, head to Titanx Hub to view your positions. You'll see your Ethereum assets, your Pulsechain assets, your Eros holdings, and your Dragonx Eros liquidity all in one place. The bigger picture is simple. Build connections, build liquidity, build accessibility. And if enough people choose to do that, the ecosystem becomes more useful, more interconnected, and better positioned for future adoption. That is the practical move sequence behind the vision. Titanx community, this isn't about hype, it's about structure. Markets reward structure long before they reward attention. So the core question is, what should we be building today so we're ready tomorrow? Across the Titanx ecosystem, you have Dragonx, Helios, Blaze, Hydra, Scale, Taurus, Unity, JakeX, LegendX, Eden. Each has its own community, its own holders, and its own vision. The danger is that if every project grows separately, the ecosystem stays fragmented. Liquidity is scattered, communities are isolated. The vision behind Eros is to connect, not replace. Connect those projects, connect their liquidity, connect their accessibility. If you already hold ecosystem tokens and it fits your own goals, consider bridging them to Pulsechain, then participating in liquidity pools where it makes sense. Tokens sitting passively in wallets can be hard for others to access, but liquidity makes them usable. Imagine that repeated across all the ecosystem projects. Connected Dragonex, connected Helios, connected Hydra, connected Scale, Unity, Taurus, JKEX, LegendX, and so on. Instead of 40 separate communities, start building one network. Eros was designed with features that some supporters may value, such as no developer allocation, no treasury, no DAO controlling funds, and a revoked contract. Whether those features matter to you is your choice. The community goal isn't simply to chase price, but to build infrastructure, more liquidity pools, more participants, more connected projects, more accessibility, so that if the market turns favorable later, the groundwork is already there. It's not one project wins and the others lose. It's success as a network. If that's the direction the community wants to pursue, then the mission is build first, connect first, strengthen first, so the ecosystem is ready before the next wave of attention arrives. That's the strategy, building a foundation that momentum can build upon. Titanx community, here's the opportunity. Instead of holding ecosystem tokens in isolation, consider bridging them to Pulsechain and participating in liquidity pools like Eros, if it fits your own strategy. The idea is straightforward. Liquidity creates markets, markets create access, and access creates participation. Eros was built without a developer fee, a treasury, or a DAO control, which may matter to some holders. The goal isn't hype, it's building liquidity pools, growing accessibility, and preparing ahead of the next market cycle. One ecosystem if people choose to connect it. Eros on Pulsechain in this telling, the idea is different from most farms. Instead of farming for a new inflationary reward token, you choose to use the assets you already believe in. For example, if you're holding Dragonex, Helios, Blaze, Hydra, Scale, Taurus, Unity, JKEX, LegendX, or Eden, you can bridge them to Pulsechain, pair them with Eros in a liquidity pool, and become the liquidity provider yourself. Then, instead of earning a separate inflationary reward, you're earning the trading fees generated by your pool. And if you choose to stake and lock your Eros, that's under the protocol rules. The more pools created, the more markets open up, more people can participate, more connections are formed. Think of it less like chasing the next reward token and more like building liquidity between communities. Dragonex with Eros, Helios with Eros, Unity with Eros, and so on. Each new pool adds accessibility. The vision is a network, not an isolated farm. So if enough people participate, it can become a more connected, more robust ecosystem. That's the farm reimagined. Titanx community, let's start basic. A farm usually means you deposit a pair of assets like Dragonex and Eros into a liquidity pool. That pool enables trading between two tokens, and the DEX shares part of the trading fees with liquidity providers, according to its rules. Now, many farms also mint a separate reward token. The reward token supply often increases over time, and holders frequently sell it since it's designed to inflate. The Eros approach, as described, is different. Instead of chasing an inflationary reward, you choose to use the assets you already want. So hold a Titanx ecosystem token, bridge it to Pulsechain if it suits your strategy, and pair it with Eros. You're then earning trading fees generated by your liquidity position rather than a separate inflationary token. Then, if you choose, you can stake and lock Eros to accumulate more over time, according to the protocol. But the bigger picture is about linking communities. Dragonex with Eros, Helios with Eros, and so on. Building liquidity first, building accessibility next, rather than waiting for the next bull run. The idea is to focus on strengthening the ecosystem itself. Whether that's right for each person depends on their own goals and risk tolerance.
What if Richard says burn your PDAI? He's increasing his own collateral value. Then he offers an ETH to PLS loan. Look at this massive liquidity.
Usually the way it works is they relaunch on another chain. So you get essentially community split and community dilution. People have to sell down one asset or go by the other. Both of them never go anywhere because now there's community dilution. There's no economic mass effect because there's no mass because everybody split off. So then they relaunch on all these chains. They hope to build a community. Everything dilutes and it just goes to zero. Titanx is wildly different because we're doing it omni-chain, which means that the supply that is traded on Base comes from Ethereum. It is the exact same supply. When people create X20 on Ethereum, bridge it to Base, that supply was created on Ethereum. So if Ethereum has a billion supply and somebody bridges 500 million of that billion supply to Base, now you have 500 million on Base, 500 million on Ethereum. It gets burned from Ethereum, minted on Base, so the supply, and then when people buy it on Base, they're buying it up on Ethereum because it's the same token, it's the same price. So that is very important to realize. So this Titanx strategy is extremely, how do you say it, accretive, I guess would be the word. It's the complete opposite of dilution, meaning that all the buy pressure that comes from all the other chains, if somebody, let's say we're on 12 chains, if somebody buys on Solana, it impacts the price on Base, Ethereum, Sonic, etc. Because it's the same token. So then you get this massive effect where it could just pop off on one chain and it will impact all the other chains as well because it's the same thing. So that I think that's one thing we need to push because there is a bad taste in people's mouth, including mine, with the multi-chain strategy, which is just, hey, let's just relaunch it from fucking zero.